In June, Home Depot did almost everything a retailer is supposed to do to win share. It kept its shelf full and it brought in more new SAW SKUs than any other retailer in the category. And yet somehow it still lost dollar share. Meanwhile, Lowe's did the opposite. It actually saw the share of its shelf shrink month over month and still gained dollar share. Hi everyone, I'm Lee Davis, Power Tools Analyst here at OpenBrand. Today I'm walking you through what happened in the SKUs category in June and why our data points to one very specific moment as the likely explanation: Father's Day. According to our market share tracking, Lowe's dollar share of SKUs climbed from 28.4% in May to 29.9% in June, a 1.6 point gain. Unit share barely moved up, just a quarter of a point. Normally, when we see a retailer gain dollar share, we go look at the assortment first. Did they add SKUs, add brands, add shelf space? In Lowe's case, our share of shelf data actually shows the opposite. Lowe's shelf presence declined month over month. So this gain isn't coming from a bigger footprint. Lowe's converted more dollars out of essentially the same assortment it already had in May. That's a conversion story, not an assortment story, and that distinction matters for what we're going to look at next. Home Depot remains the clear category leader in SKUs, but its dollar share actually fell from 55.5% in May to 53.5% in June, a 2-point decline. June was the Home Depot's most active month for new product. It debuted more new SKUs than any other retailer, led by Milwaukee and DeWalt, and internally that shows up. Milwaukee's share of Home Depot's SKUs jumped from about 29% to nearly 32%. But it didn't translate into share growth for the banner overall. So we have a leader that brought the newness, arguably did the right merchandising move, and still lost ground. That tells us newness alone wasn't enough to offset whatever was pulling share elsewhere, which brings us up to Father's Day. Father's Day landed on June 21st this year, and our pricing data shows a clear divergence in how the two retailers approached it. In the week surrounding Father's Day, Lowe's average discount peaked at roughly 34%. Home Depot also promoted that week, but landed closer to 29%, a 5-point gap. Zoom out to the full month and the pattern holds. Lowe's average discount rose nearly 4 points from May to June compared to just 2.4 points at Home Depot. Home Depot's average net price for SKUs also stayed materially higher through that week compared to Lowe's. Put simply, Lowe's leaned harder into value at the exact moment shoppers were in the market for SKUs as a gift, and the Home Depot didn't match that intensity. So when you line these three pieces up, the flat assortment at Lowe's, the heavy new product investment at the Home Depot, and a real gap in discounting depth, the data points to one conclusion: SKU shoppers in June were more responsive to price than they were to product newness. So what do we watch next? If Lowe's holds on to this share once Father's Day promotions normalize, that's a sign of a real durable shift in how it's converting demand. If that share slips back in July, June was likely a stronger seasonal promo win, not a structural change. Either way, this is exactly the kind of category dynamic we'll keep tracking for you each month. Thanks for watching, everyone. I'm Lee Davis, and I hope to see you all again very soon in our next Spotlight.